Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the gold market. So mostly picture remains the same as in last week. As you can see, the performance here stands not very fast. It's actually markets across the board were quiet in recent week just because of the Christmas time, end of the financial year, expectation of the coming major events. This is multiple decisions from the central banks, including the Fed, Bank of England, European Central Bank next week. It's also CPI numbers, so everything, and nobody would like to take the more risk in the current circumstances, prefer to wait and see what will really happen. So on the gold market, we actually have the same riddle. First of all, daily chart is forming some background for a possible starting of downward action. By the way, on the weekly chart, we'll also have some suggestion that might really start in the coming week. But at the same time, on the lower time frame, we have free drive pattern that has not been erased totally yet. Among the new issues that we've gotten last week, it was to mention grubber. So on Friday, we've got the bearish grubber right there. And here you can see some difference in our analysis of the euro and the gold. If on euro we still do not exclude that market could complete 106.32 target that stands above the previous top. On the gold market already has formed the grubber, and actually the same target already has been completed last week. It's right there. And in our discussion recently, we said that maybe gold market will not show the same strength, same upward performance as the euro by these two reasons. So first is because the target actually already has been completed. Second, initial downside action here was much stronger than in the euro currency. And maybe its reversal will be at the same point, but euro currency just will hit the XOP and gold market will just turn down based on the grubber. That's theoretical what we could get. There's diversions here as well. Some, or as we call it, as a bullish dynamic pressure on the euro currency. So on the 4-hour time frame chart, take a look at the performance. As long as market stands with the upward action, hopefully we were able to recognize this background that market could climb slightly higher. As becomes more evident that it is very gradual and slow. So this is definitely not, or at least it doesn't look like the continuation of this upward thrusting action. It looks like more as some extended flag pattern after the collapse, based just on the performance. So from that standpoint, this type of action, although maybe even free drive will be completed somehow, I do not know how it could be possible, but from a technical point of view, this potential pattern is not cancelled yet, so it is possible to be completed. Anyway, based on this performance, personally, I do not want to take the position. If you would like to take the long position, you need to know two vital points. First is the target, which will be free drive destination point. Second is invalidation point, which stands below the lows of the second drive. You can see here risk-reward ratio, well, not in favor of the taking the position because risk is greater than the potential reward. So that's what we have to know about the bullish position. So if you do not ready to take the short position by far, as I do, for instance, as I'm really have the conservative approach to the markets, I just do nothing. I just wait when the clarity will come and we get clear pattern. So it's one possible decision. Second possible decision, speaking about the bearish position, as we already talked about this, you could try to take in the position in advance of the possible reversal on a relatively calm and slow market, just to not trying then to jump in on a running train later when it's all doom and gloom of the CPI report, Fed statement will come. But in this circumstance, this is mostly for those who are not really comfortable with trying to, well, catch the reversal points, dealing with the patterns. They are just trying to take the position in a general direction, and they could let themselves to place a relatively tight stop. So if you would like to take the position before major reversal will start, you will have to place stop anyway above the this level, about 1823 area. It's just for some case. This is, well, actually carries more risk currently, which and this is actually the major reason why I do not want to do this. But theoretically, it is also possible, or you could stick with the grabber. But I just would like to remind you that previously we already have cut the grabber around 618 resistance, but it has been erased by the market, and market just keep going higher. So grabber is a good stuff, but it is really weak background. That being said, to express my own position, I do not want to buy, and I prefer to wait before taking the short position. But as in first case and the second case, the alternatives decisions might be done, and this is not forbidden actually. If you feel better and you just see there's some potential with this, of course you could try. So that's our view on gold, and let's see what we'll get on a really tough coming week.